Samir, the question therefore is that did this incoming downtick in world markets come as a surprise to you, part one, or were you kind of prepared for it? And do you reckon there is more to go? Because as you said, there is uncertainty. China and EU too has responded that they are going to be pretty serious about this. And if those two blocks react and retaliate, then uncertainty does stay high. So does it impact risk assets further?
Yes. So the thing is, I got one part right that in Feb only I sold off my US stock. So we have a global fund which was 99% invested on Jan end, and everybody was bullish on all these same old stocks. But there was so much talk and so serious talk. And that's what I'm saying. If you hear it a few times, at least you believe it. I believed it and it turned out to be right, that there'll be too much uncertainty. For India, what we thought was, and still think a little bit, that India is a relative beneficiary. There is not even 1% doubt on it. Okay. And it's a relative beneficiary, because the scale of our imports, exports is so little that really no economy will be affected by that. Just look at the numbers for a minute, that our deficit is about $40 odd billion. That's how they got to 40 divided by 90 something. They got to that 45 divided by that, they got that 52% number or something. And then 46, and then they made it, 23, 26, whatever they made. In that also, what is counted as our exports, I don't know exactly how much, but maybe 5, 7, 10 billion would be just the mobile phone exports to US from Apple. But literally that we are not exporting 10 billion. We must be importing 8.5 billion from China, adding 1.5 billion value and sending 10 billion to US. So the US guys say, hey, you sent us 10 billion of your exports. All these things in a normal discussion, I'm sure they will understand. But the point is that the difference, to bring it down to a 10% rate, which will remain forever according to me, even if Trump is not there, you have to bring it down by 25, $30 billion. That you can easily do by, maybe 10 billion of oil. I think it's not easy to say, oh, we can import $25 billion of oil and it is done. Because I think US is no longer accepting these simple sort of superficial changes to bring down these numbers. That's why this Peter Navarro's thing is important to understand that even a zero tariff is not enough. They want real change across industries and non-tariff barrier, blah, blah, blah. But so India is a relative beneficiary. For India to be an absolute beneficiary in the sense that the market goes up, that it cannot go up so easily if the rest of the world is going to be down 20% or 25%. If the world is going to be down 10%, then we are okay. But as of now, I think that US will be down more, because you can't really do everything by completely sidelining China and trying to do a deal around them. It's not so straightforward.
I mean, could it well happen that, sorry, if you were trying to finish your point, please do.
No, I'm saying that might be the end goal, that slowly you can do it, but you can't see the stock market, real economy. If you change everything about the system, it can be done and maybe it is required and justified, but it can't happen without shaking some returns at least.
Yeah.